6 years ago I started investing. I opened an account in a broker, started buying regularly a few ETFs, and now I'm on my way to becoming a millionaire with very little effort. To give you the full context of my situation, I'm 35 years old, I'm an Italian living in Warsaw, Poland, and I'm an entrepreneur. So I live in Europe and I'm speaking from the perspective of a European investor. Since I can remember, I've always been very responsible with money, keeping track of my finances and trying to save, even when I was earning almost nothing. But I only got into investing 6 years ago, when I started earning a decent income from my online business. I've learned everything by myself, reading lots of books about finance, and I discovered that investing is actually much simpler than most people think. Everyone can do it, and actually everyone should do it. In this video, I want to share with you my simple investing plan that will allow me to become a millionaire in the future and retire early thanks to the passive income from my investments. I hope you can find some inspiration in my example, and if you want to follow my journey towards financial independence and not miss any future updates, I invite you to subscribe to the channel. Alright, before telling you about my portfolio, I want to share the 3 principles that are the base of my investment philosophy. Living below my means. I am a minimalist. Not an extreme minimalist, because I still live a normal life. I buy what I need, I go out in the evenings and spend money on my hobbies. But I avoid unnecessary things, and during the month I spend much less than what I earn. As I showed in a previous video, I have a savings rate over 60%. This means that I managed to save over 60% of what I earn in a month. And everything I save, I invest in the financial markets. This should allow me to retire early and be completely free in the future, which is the most important thing for me. Passive investing. My way of investing is completely passive. Instead of trying to guess which single stocks or assets will perform best, I mainly invest in index funds and ETFs. These are financial instruments that track the entire stock market in a passive and well-diversified way. You can imagine these funds as super containers holding all the stocks you know: Apple, Microsoft, Nvidia, Amazon, Google, and thousands of other stocks. This is the simplest and also the most efficient way to invest, because the stock market as a whole is much more predictable than single stocks and has historically grown between 7 and 10% per year. Long-term mindset. The third principle of my investing philosophy is having a long-term mindset. To be honest, I don't like trading, and I don't think it's an effective way to grow wealth. I don't try to speculate in the short term, and I only invest in assets that I believe will gain value in the long run. Because of this, I don't worry about the ups and downs of the financial instruments that I invest in. I know that fluctuations are part of the game. So when I evaluate my investments performance, I always think in terms of years and decades, not days or weeks. In fact, I don't have a specific date when I plan to sell my investments and spend my money. Instead, I plan to keep this capital invested for my whole life. At some point I will be able to retire thanks to the returns generated by my investments, but most of my money will remain invested, and I expect my investments to keep growing even when I start withdrawing something in the future to support my lifestyle. So, living below my means, passive investing, and long-term mindset. These are the 3 key principles of my investing philosophy. Now that you know them, we can get more concrete, and finally I can reveal what I invest in. It's actually pretty boring, so don't expect anything complicated. But before I reveal it, make sure to like this video if you have enjoyed it so far. So here we go. Since I'm a European investor, I mainly invest in ETFs, which are the most common instruments for passive investing here in Europe. Most of my investment portfolio is focused on the iShares Core MSCI World ETF, which passively tracks the stock markets of the all developed countries in the world, including the US, Europe, Canada, Japan, Australia, with a total of over 1,350 stocks. I also invest in the Vanguard FTSE All World ETF, which is quite similar to the previous one, but it includes also a portion of emerging markets, with a total of over 3,500 stocks. Actually, you don't need to invest in both these ETFs. you can just pick one. In fact, their performance is quite similar. I invest in these stock ETFs very regularly. Every month, the first thing I do when I receive my salary is investing at least 1000 euros in one of these two ETFs. But I don't invest only in stocks. To balance the volatility of the stock market, I also hold bonds in my portfolio, as well through ETFs. The most important portion here is the iShares Core Global Aggregate Bond ETF, which invests in over 17,000 bonds across the world. So it's a very good way to have the same performance of the global bond market. Besides these three financial instruments that I've mentioned, I also invest in other stock ETFs, bond ETFs, and other asset classes like gold, crypto, and peer-to-peer lending. But these are smaller parts of my portfolio and I don't invest regularly in them. You know, a well-diversified investment portfolio doesn't have to be complicated. In my opinion, you can achieve an excellent diversification with just two ETFs, a global stock ETF and a global bond ETF. The crucial step is figuring out the ideal allocation between the two, keeping in mind that while stocks tend to be more volatile, they historically offer superior long-term returns. Bonds, on the other hand, provide stability and protection during difficult periods. So thank you for watching this video till the end. Subscribe to the channel, and if you want a full view of my investment portfolio, watch this other video where I present it in a much more detailed way. See you there.